I'm Greg Hunter. Welcome to USAWatchdog.com. I told you this week we're going to talk about big budgets and the U.S. budgets, and you couldn't get a better guy than the former White House budget director in the Reagan administration. We're talking about David Stockman, also a former congressman, a huge resume, David Stockman, best-selling author as well, a huge resume, The Great Deformation, also his latest book, this right here, Trumped. David Stockman, thanks for joining us today on USAWatchdog.com.
Glad to talk to you, Greg.
I want to talk about what happened with this spending bill that just happened, the $1.1 trillion. I mean, he gets in the White House. He's inaugurated on the 20th of January. And, Mr. President, you only have 8 weeks of money before you run out of cash. So what happened with this $1.1 trillion? He had to do it, right?
Well, I think it was a total calamity. They capitulated entirely. Trump went up there and said, remember, just for the last 5 months of the fiscal year, I want $30 billion extra for defense and the wall and border control and so forth. And I'll cut $18 billion in order to balance it out a little bit from domestic programs like the National Institutes of Health, the public broadcasting, a lot of things in between. And that's just a down payment for the big reductions that he proposed, as you know, for the full fiscal year, fiscal 18 that starts in October, which was $54 billion more for defense and his other domestic priorities, $54 billion of cuts on the domestic side, including like a 31% cut from the Environmental Protection Agency, which would be a great thing to do, and many similar deep reductions. Now, the problem is Trump went to the Hill, his people went to the Hill, and they got totally fleeced. They ended up with most of the increases they wanted because that's the way Washington works. More money for the defense pork barrel, more money for border control, no wall, but everything else he wanted. They added money for health research rather than subtracting it. They threw in billions for, so-called emergency assistance for floods and fires and the rest of it. But my point is he ended up with no cuts at all, $30 billion of increases, and a statement by Congress that on a bipartisan basis, we're in control, we're going to fund everything we want domestically, you can have your defense and other priorities, and we'll all march the budget higher together. Now, I think that's only the opening gambit, so to speak, for what's going to happen in the full year as the Congress struggles to try to pass the bills for fiscal 18. I think they're going to raise defense and all the other priorities he has. They're going to cut almost nothing domestically. On top of that, they're not even touching any of the entitlements, which are huge, as you know, $2.5 trillion almost of entitlement spending. And so it ends up basically with Congress winning in a small corner of the budget, domestic appropriated spending, the entitlements continuing to crank along under law at full speed in the trillions, defense rising dramatically, which we don't need. We already, spend 7 or 8 times more than the next rival that the U.S. may have in the world. And the whole thing, I think, is heading for a real fiscal bloodbath sometime this summer or fall when they run out of debt ceiling, can't borrow anymore to pay for all this, use up the cash that's on the balance sheet right now that they collected from all the taxpayers of America during April. And we're going to basically be, I believe, in a huge shutdown mode or showdown sometime in late summer.
Well, the president, and let's talk about his own real budget, which is what he should be coming in and working on, not just, you got to do all the spending. So I just don't think he fought very much because he didn't want to blow anything up. But let's talk about his real budget in 2018. What does he need to do? What would be, to you, a good sign saying, okay, now we're talking? What would he need to do if you were his White House budget director?
Well, he would need to rethink all the pledges he made during the campaign. Number one, that he's going to make defense great again. It's already far greater than we need. He doesn't need that $54 billion increase for defense. Secondly, when he promised he wouldn't touch Social Security or Medicare, that's impossible. Those two programs together cost something like 1.8 trillion a year. A lot of people need them. I recognize that. But there are millions of affluent retirees who never earned all the benefits they're getting. No one really did. These are Ponzi schemes. And they need to be means tested. We need to cut 100 billion at least out of the built-in cost of Social Security and Medicare. Then he needs to go after the other means-tested entitlements in a big way. I would propose just one big, giant block grant, put food stamps in it, put Medicaid in it, put cash assistance for families in it, and basically cut it by 10% or so over a few years. Turn everything back to the states and let the states decide how we're going to run these transfer payment programs and who will be eligible, what the benefit levels will be, and so forth. We need to have kind of a laboratory of democracy and let a little competition between the states put some discipline in the system. As long as Washington is borrowing all the money, we're going to spend, as we are right now, upwards of $1 trillion a year at the federal level for Medicaid, food stamps, and the associated means-tested programs. There's 110 million beneficiaries, or people who live in households who are beneficiaries of those programs, and they just keep getting larger every year, and Congress is unwilling to tackle the problem of redesign. So I say put them in a block grant and return these responsibilities to the states. We can't do, everything out of the imperial city in Washington. Finally, I think if he's going to have tax cuts, which I'm all for, we ought to cut the payroll tax. That's what 160 million people are paying. It is a huge burden on employers. We've got the highest cost labor in the world, and when you add another 7.5% on top of that the employer has to pay, and then extract another 7.5% from the employees' paychecks, many of them barely getting by at minimum wage or just above level of jobs. I think that's the real problem. And so we need to reduce taxation on labor and increase taxation, if we have to do it, to pay for government that we have left on consumption. And yet,
so you would, so you don't, so the 15% tax for corporate taxes, you're not, that doesn't blow your dress up. You're not, that doesn't excite you at all, the 15% bringing this. Go ahead.
Yeah, I think it's a good question. And frankly, as I said the other day, the corporate tax itself now is obsolete, stupid, and almost impossible to collect. Frankly, I would get rid of the whole thing. We should tax consumption, or if we're going to tax income, tax it at the personal level. But, double taxation of corporations and encourage them to move capital and production and accounting structures and so forth around the world, is not worth the minor amount of revenue we're getting. It used to be the corporate tax was a big revenue generator back in the 50s and 60s, in the heyday of American industrial might, let's say. It generated something like 6 or 7% of GDP. It was a major source. Today, it barely generates 1% of GDP. It's a small piece of the $3.5 trillion that the federal government is collecting right now. It's less than 10%. So, it's a tax that never was a good idea in theory. It was a tax that was always difficult to define. The expense and income matching concept for any period of time or any geographic locale. So, to make a long story short, get rid of the darn thing, get a proper value-added tax that you can levy on sales as they occur, and use that to pay for the elimination of the corporate tax and a substantial reduction or even elimination of the payroll tax. Now, I know that's huge and sweeping, but if we don't do something, we're basically going to grind our economy to a halt, and we're going to drown in all the debt that we have, both households, business, and government. And it's going to be a very, a bad time going forward unless we do something different. Now, everybody had great hope that, Trump was, an outsider, a fresh face, an iconoclast who wasn't schooled in all of the mythologies and self-serving platitudes and so forth of Washington. But I think he's already been captured. When they basically capitulated on where we started with this continuing resolution, it was because he was afraid to have a government shutdown. He even tweeted, maybe we need a good shutdown in September, but when push came to shove right now, he signed a bill that is an abomination. He has no plan to deal with this 20 trillion debt we already have, or the 10 trillion more that's built in for the next decade. And he's then talking about throwing huge corporate and income taxes on top of that without paying for them. As I pointed out the other day, the real cost of the package the Treasury put out last week, even if it was, only a one-page kind of outline of what they have in mind, but the real cost would be $7.5 trillion over the next decade. And, growth isn't going to pay for that. There's more growth built in than we already can achieve. By that, I mean built into the CBO rosy scenario forecast. And so, therefore, he's proposing to add $7.5 trillion of red ink on top of the 10 trillion we already have built in. And then he wants to throw a few trillion more in for defense and veterans and border control and Mexican walls and all the rest of the law enforcement stuff. And I want to tell you, this is a fiscal fiasco that he's wandered into in the first 100 days. And if it's this bad already after 100 days, I want to tell you, 200 days in, we're going to be in one giant fiscal crisis and bloodbath.
Do you think that that the economy really can't support this? I mean, what did the Atlanta Fed said 0.2%? Then they revised that to 0.7% growth for GDP. All the numbers. Manufacturing is plunging, productivity plunging. I mean, just one bad thing, after another. You said the economy was grinding to a halt. I think the economy is already ground to a halt. What do you think will happen this fall if they don't get a deal done, they don't get something done, or Trump actually comes through with his threat and says, okay, fine, we'll have a government shutdown? What do you think might happen this fall?
Well, there'll be panic in the financial markets, I'll say that, because, this is not priced in any sense of the word. The market isn't expecting it, and I think it will really cause some very difficult times. I just see no way around it.
So Donald Trump. So you're thinking you don't know what he's going to do. I mean, basically, if he does say, okay, I'm going to deal my heels in right now. You got the first one. I did it. I signed it. Fine. But this one is going to be different, and I'm going to go ahead and make Mitch McConnell, or at least strongly suggest, the separation of powers, to change the rules and just have a 52% vote or 52-member vote, just a majority vote, and I'm going to have a government shutdown if the Democrats don't come along. So you're saying that if that happens and we get a real knockdown, drag-out fight over the budget, you think a government shutdown could implode the financial system?
Yeah, I definitely think that. Now, I doubt whether he'll go for a shutdown by choice. In other words, the Mitch McConnells and Speaker Ryans are not going to stand for it. They have this really, I think, false idea that they prove Republicans can govern by keeping the Washington Monument open, even if we're bankrupting the country and piling spending upon spending and borrowing more and more money. So I don't think they're going to elect to have a shutdown. But what I think is going to happen instead is they're going to run out of borrowing authority under the debt ceiling. You know, it's now frozen after March 15. We had this phony holiday for a year and a half, but after March 15, it locked in at 19.8 trillion, which means that when they run out of cash, which will be in a few months, then they're going to need a majority in both houses to vote through a multi-trillion-dollar increase in the debt ceiling. I don't think they have the votes. I don't think the Freedom Caucus is going to vote for that. I think they don't have a prayer of getting any Democrat votes for it. If they do, Trump will be forced to give up almost everything that he's trying to accomplish by way of tax cuts or the rest of his agenda. So I think that's when the rubber is going to meet the road, when they have to raise the debt ceiling. It'll make the crisis that we had in the summer of 2011 look like a Sunday school picnic by comparison, because at least back then, when push came to shove, and frankly, I think what they did was wrong, but Obama, the Democrats, and the moderate Republicans controlled the government, and they cobbled together, you know, this phony sequester mechanism and that committee that was supposed to study entitlements and make big reductions. So in return for what turned out to be nothing substantial by way of spending control, they were able to get a majority to raise the debt ceiling. We're in a different ballgame now. The Democrats aren't playing. Obama is gone, thank heavens. And the conservative Republicans and the Freedom Caucus members more or less control the action when it comes to debt ceiling increases. And unless there are big changes in entitlements, I don't see where they're going to get the votes. On the other hand, Trump is opposed to any entitlement reforms. And most of the middle-of-the-road Republicans, the same ones who, you know, more or less almost derailed the Obamacare legislation, repeal and replace, the same people will never vote for a debt ceiling increase if it is, accompanied by big entitlement reforms. So we've got, this isn't just speculation. This is really what's coming down the pike. As I was saying a moment ago, I don't think it's even remotely anticipated by the markets. It's not priced in at all. And that's when you get huge disruptions in the financial markets, when they're hit by a surprise or a black swan, as they call it. And that's where we're heading, I think, within a matter of a few months.
And so anybody watching this right now at this point says, wow, by the picture he painted, by the numbers you put out, it looks like David Stockman thinks we are on our way to a crash. No two ways about it. Is that what you think? We are on our way to a crash?
Yeah, absolutely. I mean, the market is insanely valued right now. They were trying to tag, and this was the robo machines and day traders, but they were trying to tag 2,400 to close out the week. They ended on the S&P 500. They ended up at 23.99 something, I think. But the point is that represents about 25 times the trailing earnings for 2016, at a point when we're already into a recovery, so-called, that's lasted 96 months, almost the longest one in history. And so what the market is saying is that we have reached a point of full employment forever. There will never be another recession or any kind of economic surprise or upset or dislocation, and the market is pricing itself for perfection for all of eternity. Well, this is crazy, okay? I mean, we've got, as you were talking about, we got headwinds everywhere. The auto industry is now starting to roll over. The red Ponzi in China, it's only a matter of time before that explodes. We now have debt for the household sector back above where it was before the 2008 crisis. I could go on to list all the indicators, but the point is, I think the market could easily drop to 1,600 or 1,300 by 40% or even more once the fantasy ends. The government shows its true colors. That is, it's heading for a fiscal bloodbath. And this crazy notion that there's going to be some great Trump tax cut and fiscal stimulus is put, to rest once and for all. I mean, it's not going to happen. They can't pass a tax cut that big without a budget resolution that incorporates 10 or 15 trillion of debt over the next decade. And, it's just not going to pass. And all of this, I think, is fantasy that, week by week, slowly the market is beginning to figure this out. Now, what it means is all the insiders, the corporate insiders, are selling their stock like there's no tomorrow. We're at record levels of insiders selling. Institutional sales of stock have been basically going on ever since shortly after the election. What we have here is the usual end of the cycle. Call the retail investor to the slaughter. The home gamers, the people that listen to Jim Cramer and that sort of thing, are buying stock or they're buying ETFs. But I think this, is the greatest suckers rally we've ever seen. There's nothing underneath it. There's no bid for the stock once the panic sets in. And we're going to hit an air pocket. It's going to the S&P 500 is going to drop by hundreds and hundreds of points, sometime, I think, over the next few months as we drift into this unexpected crisis.
Do we think we have a crash before the end of the year? I mean, is that how you're
candy? Absolutely.
Big crash before the end of the year. Would you target fall?
Yeah, I would target sometime between August and November because that's when the rubber is going to meet the road on a debt ceiling increase, when they're out of cash, when Washington is going to really end up in vicious political conflict over what to do about the debt ceiling, and when they have to take on the full year appropriations bills for next year. As I was saying earlier, we got a foretaste of that in what happened with his continuing resolution. But to boil it down, Trump wants $54 billion more for defense, another $5 or $6 billion for veterans and law enforcement and the border wall. So let's call it $60 billion for next year in the appropriated side of the budget, and he proposes to cut $60 billion through massive reductions, which would be a good idea. Eliminate the National Endowment for the Arts and Corporation for Public Broadcasting and Community Development Block Grants, and rein in the NIH, National Institutes of Health, a little bit. They're all basically run by disease and medical lobbies of one type or another. So I think all of this is for the good, but the point is there isn't any Republican support for it. It's already been cast aside. It's kind of treated as a joke, even in the Republican side of the Appropriations Committee. So that means that they'll get to October 1. They won't have budget. They won't have appropriations bills for next year. We'll be back in the same continuing resolution crisis that the bullet was dodged this week, a couple of days ago. But that means that at the same time that you're out of debt ceiling and out of cash, you're not going to have appropriations bills to keep the government open from the Defense Department to the Washington Monument, as I call it, for the coming fiscal year. I mean, it is going to be, one giant fiscal bloodbath, the likes of which we have never seen.
So what would you do? Would you move to the Canary Islands? Would you buy gold? Would you pay off your house? Would you move to a cabin in the woods somewhere? I mean, what would you
Well,
do? How would people need to? What do people need to do to protect themselves? In all seriously, what do they need?
Well, the main thing, seriously, is get out of the markets. These markets are unstable, they're rigged, they're unsustainable. There is no reason to own stock at this point of the game. It is so overvalued that maybe you can get another 2 or 3% up, but you're facing a 30 or 40% down. The risk reward is horrible. The bond market is one giant bubble because the central banks have been buying all of these bonds worldwide. They've been buying trillions. Right now they're still buying $1 trillion or so on an annual basis, but all of that is coming to a halt. The Fed has finally run out of dry powder. They're out of the bond buying business and are even talking about initiating the shrinkage of their balance sheet, which clearly needs to happen. The European Central Bank now is essentially near the end of its money printing spree because the Germans have had enough of it. Even in Japan, which has gone off the deep end with QEE and money printing of a just crazy dimension, even they are beginning to have second thoughts. And even in China is what I call the red Ponzi. The government there is struggling desperately to try to slow down the growth of credit and speculation and bubbles everywhere, from commodities to housing to just overinvestment in the Chinese economy. So my point is, everywhere in the world, the central banks are finally getting to the end of the road. There isn't going to be any more money printing, and that's going to leave a giant mess on the doorstep of all the fiscal authorities, and it's going to make the bond market a particularly dangerous place because bonds are totally mispriced. In other words, if the central banks had not bought 20 trillion worth of government bonds, I'm talking worldwide now, over the last 2 decades, the yield on debt everywhere in the world would be much higher, several hundred basis points. The price of bonds, accordingly, would be commensurately lower. And therefore, you have, in what is roughly a 100 billion global bond market, 100 trillion, a giant 100 trillion global bond market, corporate and government, the biggest bubble that's ever seen. So the advice is get out of the bond market, get out of the stock market, buy some gold, and keep buying gold, not all at once, but slowly, because when the financial system finally unwinds and the monetary authorities are totally discredited, which is, I say, is coming soon, I think the one hard asset in the world that people have believed in for centuries is going to have another day in the sun. And remember, the gold market is relatively small compared to the size of the equity markets of the world, 70 trillion, or the bond markets, 100 trillion. The gold markets are only a fraction of that. And so when the panic comes and the stampede into something, the ultimate, safety net or safe haven occurs, I think the price of gold is going to rise dramatically.
And you would be a buyer of silver for the poor people in the world, like me. You'd be a buyer of silver.
Yeah, I mean, either way. I mean, I focus more on gold, but silver is like, as you say, the poor second cousin. But both of them have been monetary assets long before central banking was invented, long before Keynes published his specious nonsense, long before we got into the last 20 years post-Greenspan of crazy bond buying, QE, money printing, and all the rest that is spread to every central bank in the world. So silver was there long before any of that. Gold was there long before any of that. They became monetary assets because of their scarcity and all the other characteristics that people know about. And I think they're going to have their day in the sun again because fiat money and central bank driven financial systems, one, are false and unsustainable, and second, have reached, the breaking point as far as I can tell.
Best-selling author David Stockman, thank you for showing your brain. The book Trumped, which incidentally you've told me on and off camera you like Donald Trump, but he's got a lot of problems. Your next book, you say you have something coming up. Your next book, what is that? What is your next book? Just give us an idea.
The theme of it, and I'm still working on it day to day, and it's stuff I write about in my blog, David Stockman's Contra Corner. But the theme of it is basically the undrainable swamp. Trump had the right idea. He wanted to go down there and drain the swamp. It turns out it's far deeper and more, infested with more creatures than he ever imagined. A lot of them happen to inhabit the Republican Party, or their interest groups and lobbies and PACs that support the Republican Party. And the deep end of the swamp is on the Pentagon side of the Potomac. That's where the real waste is, hundreds of billions. And he didn't understand even remotely what the swamp was. And I think it's only a matter of time before he disappears. His hair, even his great hair will disappear under the waterline not too far down the road.
David Stockman, your website, David Stockman's Contra Corner, the book Trumped. There'll be all kinds of links to David Stockman and his Contra Corner and all that. David Stockman, thank you for joining us today on USAWatchdog.com.
Great to be with you.